Welcome to etvFutures.com. It's Thursday, December 6th. I'm Remy Hokie for your Commodities Recap. NYMEX crude oil futures ended 3.1% higher, closing at the session above $90 a barrel. This was a reversal from trading earlier, as prices hit a low of $85.82 in electronic trading. January crude gained $2.74 to close at $90.23 a barrel. Futures prices hit the highest closing level in almost 2 weeks. There was support coming from a revision of OPEC's forecast for increased economic growth in China, as well as from the decline in U.S. crude inventories. Other energy futures were up on the day, with January RBOB gas up 8.43 cents to $2.3013 a gallon. January heating oil gained 5.57 cents to $2.5450 a gallon. Meanwhile, natural gas futures rallied on the latest EIA report, which showed inventories falling for the second straight week. U.S. natural gas supplies were down 88 BCF for the week ended November 30th. January nat gas futures climbed 14.5 cents or 2.1%, closing out the session at $7.33 per million BTU. Over in the metals complex, gold futures closed higher, with February gold gaining $3.40, ending at $807.10 an ounce on the NYMEX. Other metals also rose, with March silver up 16.5 cents at $14.625 an ounce. December copper gained 0.25 cents to finish almost unchanged at $3.0185 a pound. This afternoon, we're joined by Tom Puckett, commodity broker at KIS Futures. He'll recap today's action in energy and metals futures, and he'll also give us his short-term outlook.
Thank you, Remy. We have an interesting week trading this week in the energies as well as in the metals. We had inventories looking pretty solid in the crude complex, energy complex, and as a result we have had a drop in the last day or two down toward the $86 level in crude. Today's trade is around 90, up a couple of $50 or $3 up from where we were. But nevertheless, the discussion is out that maybe the rally, the big push on the oil prices may, in light of OPEC's discussions of having increases in production, may slide some prices down, may translate to lower consumer prices, etc. It also may tend to make the market a bit more fluid, a bit more liquid. In the charting, we have resistance around $90.35. We've been up near there, and down supporting about 85, 92, 96 in the futures. Of course, the actual spot is a different price range than the futures, but they do relate to each other. Right now, we're looking at a price at about $90.25. Will it stay there? Will it go higher? It's a trade difference. Basically, what it comes down to is the market's going to pretty much try to buy it up, try to sell it down. No real indicator there, but the idea of going higher and higher and higher, it seems the higher the commodity goes, the less availability of going higher it gets when a market reaches its high. Usually that word high kind of indicates where they are, and so sell-offs can follow. What the platform might be in crude and the energy complex, we don't really know yet. New price range certainly in view. Natural gas has had a little rebound from a couple of days ago, but still trading on the front month in the $7.35 range, $7.34. We've had a range of somewhere between about $7.46 and about $7.13, $7.14. With action in between, we've had some interesting retracements. At the same time, cold weather really hasn't started in, and as we look at the weather, we may see some winter storms, some winter weather actually starting up, which may provide some support to the natural gas complex. Over in the metals, we have a $800 price approximately on the gold, about 802, and a range recently of about 810.50 down to about 773 in the last couple of weeks or so. And basically we're trading in that range. Gold still, I think, is going to retain its desirability as a haven, even if the price of crude oil falls off significantly. Even though the world seems to be a little friendlier this week than in the last few weeks or months or so, it nevertheless, gold will still, I think, retain its desirability. Silver's following along. It's in the $14 and 45 to 50 cent range, with a similar type of view on it. Silver semi-industrial metal, but it's also a monetary metal. So we're holding price pretty well in the metals, even though the crude oil and natural gas are lower than they've been. Those markets by no means are completely washed out. They're not in a down mode at this point, I don't think, personally. If you look over at the currency markets, the euro is off a little bit from its highs, and the dollar is, of course, off its bottoms in the 75-74 range. But we still are pretty extreme in those prices within the extreme ranges. What that means to the economy will translate into the Dow Jones, S&P, as well as other complexes. The Dow Jones is trading mid-13,000 right now. Could go higher, could go lower, but definitely it's a viable and strong market. Things really don't look all that bad in any way, shape, or form. So as you look at the two bellwethers, the metal markets and the energies, looks like there's a little help in sight in the sense of just continuous high prices. At the same time, we're not just blowing out the bottom either, so the trader will be going long and short, looks like, in the weeks ahead. Thank you very much.
That was Tom Puckett, commodity broker at KIS Futures, with his commodities commentary. I'm Remy Hokie. Join us later for PM Exchange right here on etvFutures.com.